Hey everybody, this is Jamin Coker with Secure Financial Management with your December 2017 Economic Update. Now in this update, I'm going to discuss some of the events that have impacted the markets in the last few weeks and what that might mean for you as an investor. Now please stay tuned to the end for a required disclosure statement. Well, hi everybody, and welcome to the last update for the year of 2017. I'm going to approach this a little bit different than what I usually do. Now, you know that typically I'll talk about a lot of things like employment rates and company earnings and maybe some events that are happening around the world, but I'm going to focus on just one event that's taken up a lot of time on the news and has been headline news for quite a while, and that is the tax plan that just got passed today. Now, I'm not going to start discussing what it might mean for individuals or the political ramifications of it, because that just kind of gets into a lot of details that we don't really have time to discuss. But really what I want to focus on is how it's going to impact the corporate tax rate and what that might mean for the stock market and also for your investments as well going forward. So the one thing that has come from all angles, whether it's Republicans or Democrats or newscasters or whatever, is that this is going to be big for corporations. It might affect all individuals a little bit differently, but it's going to be big for corporations, right? Because it's dropping that tax bracket down from 35 down to 21% was where they landed on with that. Now you might think, well, who cares about that? How's it going to affect me personally? Well, you know what? If you're one of my clients, or even if you're watching this video, it's very likely that you actually have exposure to corporations. You're probably even actually partial owner of a corporation, right? Especially with the portfolios that we build here, and maybe something that you might have in your 401k, or if you own any sort of mutual funds or ETFs. You own portions of corporations, so it's gonna matter, right? It's gonna matter what happens with those corporations and how their taxes are affected and what their cash flow looks like. Now, if you take it one step further, there's been lots of discussions like, well, the companies aren't even going to pass that on in higher salaries. They're just going to buy back stocks. They're going to give large dividends. Well, if you're the owner of one of those companies, that's going to help you out as well, right? They buy back stock, that typically drives up the stock price. If you're an owner of a company and there's dividends being distributed, higher dividends than normal, you're going to benefit from that as one of those company owners. You might not think of yourself as the owner of a company, but very likely, if you're invested with me, you certainly are. If you're invested in your 401k or 403b, whatever it might be, think of yourself as the owner of a company, because you actually are partial owners, and that will affect you, and what's good for them is going to end up being good for you in that element of your investing as well. So I just want to plant that seed for you to think about. It also helps out with a couple of other things. You've heard me in the past talk about a PE ratio, right? It's a price to earnings ratio. And that's been something that we've been looking at as one of our metrics when we're looking at the way we invest and what's happening with the economies. We don't want that PE ratio to get too high, because what it means is, what's the value of a stock versus its earnings? Like, are they out of whack, or are they in a good ratio? And recently, with the stock market rising as rapidly as it has been, that PE ratio has expanded, and it's been something that I've talked to a lot of you guys about. It's been something that we've been watching, and we said, it's not a big deal now, but we are kind of keeping an eye on it because it's starting to get ahead of itself. Well, if this tax plan helps to increase company earnings and more profitable, they can return more money to their shareholders, and that earnings rate goes up, it starts to put that ratio back in play. It starts to help equalize that and even it out and become less of a concern. So just a couple of things I wanted to share with you before we close out 2017. Thank you so much for all of you that have watched these, liked, and sent me comments or questions based on them. I certainly appreciate it a whole lot. We'll see you in the new year. Merry Christmas, Happy New Year, and can't wait to start 2018 with you.